This is Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. I'm putting out this video a little late than usual, but you know what they say, better late than never, right? Besides, I want to keep up this consistency of me trying to put out a video for you guys every weekend. So anyway, for those of you guys that are watching this video for the first time, I want to welcome you and thank you so much for tuning in. And just to kind of give you an idea, this is something I usually do every weekend where I put out a video for you guys to show you guys a few technical trade setups, especially you traders out there. So if it's something that you might want to keep your eye on or take advantage of as we head into the following week of trading in the Forex market. So anyway, in today's video, I've got a couple of advanced patterns that I want to show you guys. And I also want to show you guys the three different ways that you can predict how the market is going to move in the future after it has made an impulse leg. So let's go over to the charts. So anyway, I'm going to start off with the pound against the US dollar. And what I'm actually going to do is I'm going to go back onto the daily chart, the daily time frame, to show you guys a potential advanced pattern that it's going to complete along, near the previous structure. So this is what we're looking at. This is what I'm expecting the pound to do. I mean, after we had I think this is, I'm kind of repeating myself now every week. I talked about this currency pair last week as well, but I want to show you guys. So after this impulse leg, we had the market come into a little bit of consolidation here. Let me try and put a box strand there. Maybe a light one. Oops, that kind of. So let me. Yeah, there we go. That's what I'm looking for. So we're looking at that box. After the market made that impulse leg, it came into a little bit of consolidation, and then it finally broke to the downside. I mean, this type of consolidation is what we call a bearish rectangle. If you guys are familiar with complex consolidation, you would know that this is a bearish rectangle. And usually with a bearish rectangle, you would expect the market to break to the downside. I mean, 9 times out of 10, it does end up breaking into the downside. So after it broke to the downside, the market is kind of consolidating right here. And I told you last week when I put a video on this currency pair, I told you watch for this structure. Like the market, it's likely the market is going to respect this structure, and that's exactly what we're seeing. I mean, that's what the market does. It's so eventually it's going to break to the down. Eventually, this market is going to break to the downside, but before it does that, it's going to consolidate here. How long that consolidation is going to last, I have no idea, but that's just what the market does. So anyway, that's not what I'm trying to talk to you guys about today. What I'm trying to talk to you guys is I'm going to focus on this impulse leg. This impulse leg, this is what I'm interested in. So after this impulse leg, now we're coming into a little bit of consolidation. So why don't we go ahead and bring in our Fibonacci retracement, Fibonacci 2, X to A leg. And what do we see? Because I think I'm using a different theme for my chart. I didn't like the black one last week, so I've got the blue one. So hopefully this one is much better. So we got the impulse, the X to A leg, and we got a 50% retracement. So as soon as you see the 50% retracement, obviously that tells you that we are looking at a potential bad pattern. So you would expect this market with the bad pattern. You don't need to move your Fibonacci levels around. You just need to, let's see. So X to A leg. This is a little bit too. X to A leg. Yep, that's the one. X to A leg. A to B, B to C, C to D. You would expect this bad pattern to complete around the 886 retracement, which is gonna put us somewhere 132, around 132.60. So potentially I'm expecting this market to rally all the way to that bad pattern completion. I mean, it is likely that the market is going to come back into previous structure right here. It's likely that the market is going to come into this previous structure, and we might never get the bad pattern completed. So it is very likely that the market is going to do that. But just in case it doesn't do that, I mean, it comes the things that if it does comes up to the, I mean, what was I going to say? Like if you're looking at the potential, like what the market is going to do, at the end of the day, the market is still going to turn bearish at some point. So if the market reverses at this point, And if you end up taking this trade for trend continuation traders, then your risk is going to be a lot, more higher than if you wait for the bad pattern. Because obviously, if you wait for the pattern, your stop loss is going to have to go above previous structure high, which is going to be somewhere around 134.25. So if you take the bad pattern, you're potentially going to have a better risk to reward ratio. However, I'm not too sure if the market is going to complete the bad pattern. I mean, because I'm an advanced pattern trader, this is what I'm going to do. I'm going to wait for the bad pattern. But I wouldn't be surprised if the market comes into this previous structure, support now turned resistance, and then reverses here. But at the end of the day, this market is going to rally at some point. So let's see if we do have a potential. I think we might have a Fibonacci confluence here. Let's look at the extension level of this. Swing low to swing high and back down again. And look at what we got. We got the 1618 extension. So the 1618 extension and the 886 retracement. So we do have a Fibonacci confluence at this point. So, and we know how the market tends to respect Fibonacci ratios as well. So this is going to be something that, I'm definitely going to keep my eye on this one, and see what happens. But if I drop this back down to the 1 hour time frame, so what I'm going to do is I'm going to delete all of this because it's going to interfere with the kind of analysis I'm going to do for you guys next. Pound against the US dollar, yep, delete. So when I talked about how you can predict, there's three different ways that you can predict what the market is going to do after it's made an impulse leg. So now I'm looking at this. This is the huge impulse leg that we got from that support structure that I told you about last week. So now the market, it's consolidated. And there's three different ways this market is going to consolidate. Right now, you can't tell which kind of consolidation the market is doing. I mean, you can guess, but there's three different ways this market is going to consolidate. And I'm going to try and show you guys all the three different ways. So the first way is, after we have the impulse leg, the market is likely to do something that are called bullish rectangle in this case. I just showed you an example of a bearish rectangle. So if you get an impulse leg like that, so let me just kind of try if I can explain this properly to you guys. If I don't like that, let me make it red. So I'm just trying to draw a channel with this red lamp. This is a channel that I'm drawing. So if the market makes a bullish move, I'm going to change that to green. The first type of consolidation that this market is likely to do is called a bullish rectangle. So we're going to see the market is going to come in and do something like this. Up, down, up, down, up, down within this channel. So if the market does that, there is a high probability that the market is going to eventually break out to the upside. So let me just go back onto the daily chart and illustrate this. So in this case, we do have a bearish rectangle. So we had an impulse leg, and the market came into this channel. And what did we see? Up, down, and then finally the market broke to the downside. So back over to the 1 hour chart. And this is what I'm expecting the market. If the market does something like this, then you can expect the market to break to the upside. So this is just the first type of consolidation. So the second type of consolidation is, actually can I just move along? Actually, I know what I'm going to do. I'm going to just, where's that, there's this tool that I'm looking for. Object tree. That's the tool I'm looking for. No, not that one. This one, yeah, that's it. So the second type of consolidation that I expect the market to make is called, I bet you guys can guess the next one that I'm going to talk about. It's called the falling wedge. So this is the type of consolidation where you can expect the market. Let me just bring in my do the channels again. So you can expect the market to consolidate in a channel, a falling channel. That's why it's called a falling wedge. So you can expect the market to do something like this. From there, it's going to retrace back, go back up, trace back again, enough within this channel. So if the market does that, you can expect the market to break to the upside again. So these two types of consolidation will show you that the market is going to break to the upside eventually. And then we have the third one. The third one, however, is going to tells a different story. That's why I might not have a space to. But let me delete this. So the third type of consolidation. Let me see if any prizes for guessing which one this is. Oops, what's happening here? So we have an impulse leg, and we have a consolidation, which is called the rising wedge, just the opposite of a falling wedge. So the market can do something like this, and then consolidates here, here, here. If the market does that, then there is a high probability that the market is gonna eventually break to the downside. So let's bring on our and see. So it is very unlikely that the market is gonna form a falling, rising wedge from here. It is very unlikely. I doubt we're gonna get a falling wedge, just because of the fact that the market just respected a huge support structure level, and it's likely that this market is gonna continue to rally. But the next move is to wait for the market to make this type of consolidation, either this one or this one, and then we can expect the market to rally in order to complete either to complete our bad pattern that I just showed you on the daily chart, or to go back into the previous structure support, which is now going to be resistance. So yeah, let me go ahead and delete all of this. I think we do have a potential advanced pattern as well on the 1 hour time frame. I'm gonna go and see if I can show you guys. So assuming this market is going to consolidate, which I expect the market to consolidate within this structure, we do have a potential bearish godly pattern. So we have X to A leg, 618 retracement. So we're looking at a 127 extension of the A to B leg. So A to B leg here. We have potential godly pattern here. Hasn't completed yet. It's going to complete in about 27 pips. So this might actually be a very good, one of the first trading opportunity that we're likely to take once the market opens tonight. Because like I do expect the market to consolidate. I mean, we do have a period structure here, so it is likely that the market is going to consolidate. I'm hoping it's going to form a bullish rectangle, to be honest. But we'll just have to wait and see what the market does. So anyway, moving on to the next advanced pattern that I want to show you guys. It's on the Aussie dollar, and it is on a daily time frame. So Aussie dollar, see, I don't even have to try and show you guys what the advanced pattern is. I'm sure you can guess that it's a cipher pattern that we're looking at, bearish cipher pattern. So let me see if I can just draw the cipher pattern without using my Fibonacci retracement and see if I can get I'm pretty sure I'm not going to be too far off. So cipher pattern, I'm going to guess is going to complete maybe somewhere, I don't know. That looks like a 786 retracement. So let's see. Gonna miss that by a low. I think it's not gonna be perfect, but yeah, see, I missed that by quite a few pips. So 76.39, that's where the cipher pattern is gonna complete. So as we can see, the market is not too far off from there. I mean, less than 100 pips actually. And this is actually a very good free trading opportunity because we do have previous structure here. Look at this structure, look at this. So the market is technically is in consolidation. So this is going to be a wonderful trading. But stop loss obviously has to go above this high, not this high. It has to go above this high because it is likely that the market. I do expect the market to come back into the structure, but where it's going to reverse, it's a different story. But this is a trading. This is a very good cipher pattern to keep an eye on. So that's it for today, and I'll show you guys the result of my signal service. This week has actually been a very slow week. I mean, we didn't take any trade until about maybe late Thursday or maybe Friday morning, and we ended up taking a couple of advanced patterns. One of them ended up being a winner. The other one, we hit the first target on that one. We're still waiting for the second target, but they're all small trades, so nothing major. So let me bring in my Excel. So as you can see, yeah, that's just a couple of trades that we took this week. Euro dollar, we had a winner. It's amazing how the last 1, 2, 3, 4, 5, 6 trades that I've taken are all cipher patterns. So it's kind of like January is the month of the ciphers really, and it's been pretty good. I mean, 8 trades taken so far, 5 winners and 3 losses. So as you can see, 20 pips, 30 pips. So let me just show you guys the first trade. The first one was the euro against dollar. Yeah, that's the bearish cipher pattern that we took. I didn't post this trade on TradingView, however. So let me just go over to the chart and show you guys euro dollar. I'm doing a 30-minute time frame. So as you can see, this is the one I posted. Obviously, entry at 106.91. The market came in. It was a pretty painless trade because the market took our order and then it reverses, hitting our first target and second target. This is a kind of trade. I mean, after you've waited a whole the first 3 days, Monday, Tuesday, Wednesday, there was nothing to trade. No, the market was just doing what it's doing. They're just waiting for that opportunity, and finally came, and you're hitting the first and second target, in a painless trade. It kind of makes it feel like it's worth it. The wait. Sometimes it pays to be patient. I mean, it doesn't always happen like that. Sometimes you can wait, for the next trading opportunity when it comes, and it ends up being a losing trade. But that's one of the things. That's the kind of things that we deal with as traders, really. So the next one was the one that actually posted on TradingView. As you can see, we still have a position open in this one, but we've already hit our first target. We're still waiting for the second target. That's the New Zealand against the US dollar. And it's another bullish cipher pattern. Actually, that's the trade signal I sent out. And let me just bring up and this is the trade. So as you can see, the first target has been hit already. We've already moved that stop loss to break even. And I can actually show you guys this trade on TradingView. So let me just go on my TradingView and show you guys. So yeah, that's the trade. Click the play button. As you can see, yeah, that's where the current is. We'll wait and see if this market is going to give us our second target. But yeah. So yeah, it has been a quiet week, but now we just have to see what this week is going to be like. But yeah, so that's it from me for now, I think. Yeah, that's all I got to show you guys. Like I said, man, if I'm giving you guys like a free subscription for the first month is free. Like you can come and join us at Signal Savvy. You can see the results have been pretty decent. I mean, nothing amazing so far. We're up on 121 pips, I think, for the year, and it's only been 3 weeks. So yeah, we're hardly gonna have a losing month. Like I said, if you look at our results from last year, we've only ever had just one losing month, and that was our drawdown month in the month of April. So yeah, what you can expect to come in, and you can expect to end the month. I mean, if you follow every single trade that's sent out, and you can expect the worst thing that can happen is you don't make money that month. And any week or any month that you go without losing money in trading, it's a very good month. So yeah, most of the months are going to be break even, but we are pretty consistent. I can tell you guys we're pretty consistent. I mean, you can see I show you guys all the results here. So yeah, the link is at the bottom of this video if you want to come and join us. Like I say, it's free for the first month, and if you don't like it, you can quit anytime. It's not like you're signing a contract or anything. And if you don't like that, then you might want to follow me on TradingView as well, because like I said, I do post some trades on TradingView. for you guys as well. So if you follow me on Trading Views, you're gonna get to see all the trades that I post. And yeah, so I think that's all I've got to tell you guys. That's all I've got to say now. So I hope you have a wonderful trading week, and I'll see you guys next week. And in the meantime, keep it simple, guys.